Welcome back to Daytime. You know, with the market going through major ups and downs this past year, most of them downs, many are asking themselves, what is happening with my retirement plan? Well, Pamela Yellen is the author of a new book. It's called Bank on Yourself, and she's here to discuss alternatives to gambling your retirement and your savings plans away. It sounds like a great idea, but what exactly, Pamela, is Bank on Yourself?
Well, it's a guaranteed way to grow your savings, but without the nail-biting ups and downs of the markets. And it's based on a specially designed type of life insurance policy, but this is one that you don't have to die to win. And you can actually use the plan to get back every single penny you pay for things like cars, vacations, business equipment, or even a college education, all while growing a nest egg that you can predict and count on.
All right, now I always worry about it when somebody says life insurance plan, because I'm thinking, okay, what are you selling? And so seriously, what kind of life insurance plan can you actually live off of and pay yourself back for cars and college tuitions and things like that?
Well, let me explain the two basic types of life insurance very briefly. They are either the kind you rent and the kind you own. The most common type of life insurance is the kind you rent. That's called term insurance. Like renting a home, you don't have anything to show for the payments you make unless you happen to die during the term of the policy. With the other type of policy, it's called cash value insurance. And like owning a home, the payments you make build equity for you. And the Bank on Yourself plan actually uses a very specific type of cash value policy that has some features added to it that put the growth of your money in the plan on legal steroids. So you're going to have a lot more cash available for you to use, especially in the early years. And what I found most interesting was that out of maybe not even one out of 1,000 financial advisors or experts, and I'm including Susie Orman and Dave Ramsey and so on in that, have even talked about this type of policy.
Well, now, why wouldn't they? If it's out there for all of us to take advantage of and all of us to use, why wouldn't somebody like yourself? Why wouldn't most people come out and say, "Hey, folks, look, here's a great idea"?
Well, it's just a very rare type of policy. It's not even taught in any of the training programs, but it will beat the pants off of any other saving or investing method that I've ever come across.
Okay, so what do I do? I'll buy. What do I do?
Well, it's actually pretty simple to get started, but I wanted to talk a little bit about how this differs from saving in the markets, because there is a big difference. What about saving in the markets, real estate, investing in gold, and so on? First of all, you basically get guaranteed growth every single year, and gains are locked in. They don't vanish when the market crashes, which is why more than 100,000 people have these plans, and not one of them lost a single penny in their plan when the markets crashed. And in fact, their plans have all continued to grow safely and securely. Now, in addition to that, you get peace of mind for retirement planning. You get a guaranteed minimum increase. Every single year, you're going to know how much you're going to be able to take out of your plan and how long you'll be able to take it for. Compare that with the stock market. The stocks have done nothing for the last 10 years. It's anyone's guess. It's a crapshoot. But, Dave, it's much worse than that, because one of Wall Street's dirty little secrets is that the typical mutual fund investor has actually been losing money every single year for the last 20 years after adjusting for inflation. And I have actual samples of my own Bank on Yourself statements.
Well, I'm definitely going to look into this. It is very intriguing. I wish we could talk longer. Pamela Yellen, thank you very much. The book is called Bank on Yourself. For more